at the Vancouver Resource Investment Conference, and I'm joined by Peter Schiff, CEO of Euro-Pacific Capital. So Peter, talk to us about the panel you just, or rather the presentation you just had on Trump implications.
Well, I talked about what I believed was going to happen during the Trump administration. I think unfortunately for Donald Trump, he's inheriting a much bigger disaster than I think even he comprehends. Right. I mean, he was able to become elected because the economy was horrible. Right. And he was able to tap into a lot of that sentiment, and he pointed out a lot of the phony statistics that were being bandied about the health of the economy. The real fiction peddler was Barack Obama and the Federal Reserve and Wall Street that wanted to pretend that a bubble was a recovery. So Donald Trump tapped into that, but unfortunately, instead of preparing the country for a rather severe economic downturn, which I think is part of the correction. If we're really going to make America great again, if we're really going to fix what's broken, we have to go through a restructuring of the economy that in the short run is going to be painful, but in the long run will produce good results. But he's promising a quick fix, that everything's going to get better just because we elected him, and unfortunately that can't happen.
Exactly. Now what are your action plans now that he is president?
Well, look, I still think this gigantic bubble is going to pop. I mean, we've been blowing more and more air into it. The bubble was initially inflated under Bill Clinton. It started to pop when George Bush was first elected. Then the Fed blew more air into it by slashing rates to 1%, created a housing bubble. That blew up. And then Bernanke and now Yellen blew air back into that bubble. And Barack Obama managed to leave before it blew up. And he's now caught with it, and it's about to pop. And I don't think the Fed can buy Trump a second term the way it did for George Bush. I don't think there's another bubble the Fed could blow. I think they're done. I think they already have a bubble in everything.
Wow, that sounds very horrible. Like, what are some things that will actually drive the dollar to the floor?
Well, it's going to be that realization. As the Fed has to double down on its failed monetary policy, when it can't deliver the rate hikes that it's promised, when the Fed has to go back to the QE well, do QE4, when they have to cut rates again, when we're back in recession, when the budget deficits explode, when they're back above $1 trillion a year, then the dollar just falls through the floor. And eventually it's going to be a crisis. I mean, ironically, the dollar was saved in 2008. It was at an all-time record low, and the financial crisis saved it. Right. We're not going to be that lucky this time. This crisis is going to be in the dollar.
Interesting. Now, so what is your advice for us? Like, what are the pieces of advice you're giving to investors?
Well, investors should stay clear of the dollar, but right. they should be in gold. They should be in, I think, emerging markets. They can be in other currencies that will rise as the dollar falls. They should be in equities around the world, in countries that I think will benefit from a falling US dollar, from rising global commodity prices. A lot of the investments that worked in the 2000s up until 2008, right? Because during the Bush presidency, from 2001, 2002 through mid-2008, oil stocks did great. Emerging markets, gold stocks, foreign currencies. There was a lot of money made. It all ended in 08. I think the same things that worked then are going to work even better this time, right, because they're not going to come crashing down when we have the crisis, because I think the next crisis will just accelerate those trends, and now you'll have huge, maybe blow-off tops in these markets.
Very interesting. Now, what are your thoughts on the euro? What about the European market?
I think the euro is bottoming here. I think the euro is going a lot higher, because I think that over the next year or two, they're going to be switching from an easing bias to a tightening bias, whereas the U.S. is going to be going from a tightening bias to an easing bias. So nobody expects that. The speculative currency traders all assume that the ECB is going to continue to be loose and the Fed's going to continue to tighten, and I think they've got that all wrong, and they're positioned completely opposite of the way they should be.
All right, well, very interesting things. Thank you so much, Peter.
Sure.